You want to know how market reversals happen in the market, and you want to know how you can actually capitalize on them. And guess what? If you have not been using these concepts, then you are basically leaving money off the table. All right. So when you are trading the markets, it is very, very crucial and important to understand the language of the market. The market is a specific language, and you must be fluent in that language. So I see that whenever traders are trading, they just focusing on the technicals rather than trying to understand the language and the behavior of the market. What is the market telling you? What are the candles telling you? Who is involved, and what kind of behavior are we actually seeing in the markets? And when you can combine all these forces, right, you will be on the right side of the market most of the time. So basically, these are the four things that you can apply, the four tools that I use to actually understand or to gauge or to understand reversals in the markets. The first one being the momentum or momentum in candles, right? So basically, you will see when you are in the markets, just like we see with the price action that we have here, you realize that at some point the market is printing large candles, right? You see candles with very long bodies and small wicks or tails, right? So what does it mean? What it means to us is that there's so much momentum, there is volume in the market, there is volatility in the market is pumping and pushing. That's what is at the back of our mind. And obviously, we all know that as traders, there are people with big pockets who are moving the markets. So we know that, okay, now they are involved. So whenever I see a candle like this, a candlestick like this, that is exactly what is on my mind. Whenever I see a very long candle, that's exactly what I'm thinking about, right? This is the same concept we use when we are talking about supply and demand. We are looking at those strong leg outs. So you see large momentum candles when the market actually wants to push in a certain direction. So in contrast to that, when the market is about to reverse, you are going to see that the candlestick sizes will start reducing. Just like we see here, we see an upward movement. The market has been buying, right? And you can see the nature of the candles. But comparing these candles, right, with these candles, even with the swings, right, you realize that the previous candles or the previous swing point actually had very large candles. What I'm saying is this: if we look from this point to this point, right, in this range, we can actually see that the market has been producing very large candles in this swing. And then we had the correction, obviously. And then we had the next swing point or the next impulse push, the impulse phase or push phase. We can see that the candle size is actually reducing. The momentum is actually reducing. So compared to the previous momentum, we can actually say that the market is losing steam. The market is losing its momentum, and therefore we are actually trying to time the reversal. We know that at some point the market is going to reverse. Now, when we look at this swing, right, compared to this swing, we can actually see that here we had small candles, but they had a bit of long bodies, right, compared to the previous push. But if we compare this range, compared to this range, we can actually see that the market is now sort of producing very small bodies, very small candles, and there are so many in the swing. There is no more momentum. The market is about to die. Traders are no longer interested in pushing this price to the upside. Sellers are actually waiting, or they're actually preparing to trade the market. However, you don't just sell. Obviously, selling is actually another strategy that you have to implement. But in this case, I want you guys to see how I'm thinking when I'm looking at the market. So I'm like, okay, so the big guys are buying. Okay, we had a correction here, we broke structure. We see that we had another push. Now we have broken structure again. But if I look at these candles, what is it telling me? What is the language of the market at this point? The language is that buyers are actually pulling out and sellers are preparing. How do I see that? The candles are no longer pushing. There's the amount of money in the market or onto the buy side, right, is actually reducing. Okay. Some people will be closing their profits at this particular time while other people are preparing to sell, right? Now we see that here, this is what I want you guys to focus on, right? Compared to this, what can we tell? We can simply say that based on the information that we can see on our screens, the market was actually showing us that reversal is close, right? So that's it about momentum, right? Now let's get to the corrective nature of the market. Now this is a market behavior that comes from how the market moves generally, right? Whether buyers are buying, sellers are selling. We'll see that if we then combine the momentum that I was talking about with the price structure, we'll see that if we combine these swings, right, you realize that at some point we have clean pushes, right? Or we have ranges that are just pushing price either to the upside or downside. Now, I want you to see this behavior. I'm going to use this tool, right? I'm going to use this tool. I'm going to use this. I'm going to use this tool. And I'm going to draw this, right? I'm just going to replicate the same thing. Right. So what we are going to do is we are going to put this aside. Put this aside. Now, what you realize is that from this moment, we can actually see that the market, in as much as it is buying, let's put this here. In as much as this is buying, in as much as this is buying, the market is actually losing its strength and it's correcting, right? You see a corrective type of a behavior. And I want to show you something with this particular tool that I like to use as well when I mapping this price. Let me just quickly look for it. Let me just quickly look for this tool. There we go. All right. So if you come here and you look for the bars pattern, and if we just pull from this point all the way up to where the correction ended, you'll see that the market is going to create a certain pattern, right? It's going to create a certain pattern here. So let me just put it here. Let's make this black, right? So let's make this black. And we can actually see that corrective behavior is actually forming. This is where you see, in most cases, patterns like ascending channels or ascending wedges actually forming to show you that, okay, we have been pushing price, or we have been buying, but at some point we started correcting. Okay, started correcting. So when you look at these kinds of corrections, you're actually good to go. So there is a way that you can actually see this much more clearer that I actually encourage people to look at. When you want to see these corrections quickly, you can just try to squeeze price. You can just shrink price a bit. You can see, look at this, guys. Look here. We can all see that the market has been buying, right? But all of a sudden, this started happening. There is a behavior that price is trying to push price up, but it's actually correcting. There is no momentum, right? So we call this kind of a behavior, right, a correction or a corrective behavior. But in this regards, it is actually giving us signs of reversals, and that's where you find the formation of certain market patterns that traders do trade. Depending on your strategy, this is where you see patterns like ascending patterns or a descending wedge or descending channel, right? As you can see now, there's a pattern formation. This is basically the language of the market and the behavior of the market. I'm not saying you should trade patterns. If you do trade patterns, they are really good, but I'm not saying it is patterns that will tell you, but understand where this thing is coming from. Okay, so now let's continue to look at this. Now, while I'm there at the corrective behavior of the market, right? In this case, whenever you see this kind of a behavior where the market is pushing price and starting to sort of ascend, right, creating this sort of uptrend or ascending type of nature in the market, this is to show you that we are about to reverse. There's a way that in which you can actually see this, in which you can actually try to tell, which is the use of an indicator, a momentum indicator, like an RSI, stochastic, or depending on the indicator that we use. I like to just look at this from using the RSI. It's much more cleaner for me, right? So let's put the RSI 2. We can actually remove this. Let me see if I can. Okay, we can actually remove this yellow line. We are not interested in it. And we can also remove the background. I think we need it, right? Yeah, I think we need it. Okay, it's fine, right? I want you to look at something from this point, from this price point, all the way to this high point, right? From this point all the way to this high point, you can see that the market is creating higher highs. It's pushing up. But when you look at a momentum indicator like an RSI, you can actually start to see that it's actually speaking the negative, or it's saying the opposite, right? It's saying the opposite of what is actually happening. So what does it mean to you? Whenever you see this, this is what people call divergence. This is what people call divergence. The market is not in compliance, or the market is not actually saying the same exact thing that the indicator is telling you. So whenever you see this, it's another sign that the market is most likely going to reverse. So the mistake that many traders do when they're trading with an RSI is whenever they see an overbought or an oversold, they just want to buy or sell, right? So when that happens, you can see the market will start will just continue pushing up. That is not a sign to say sell now. You need other things, you need other tools for you to make that particular decision. So like we said, the second thing after momentum and momentum candles is the corrective nature of the market, which you can actually look at the behavior of the candles, or you can also look at it using an indicator, a momentum indicator like an RSI indicator, right? So the next thing that we can use whenever we see price pushing is this. We'll look at the price nature, right? The price nature. What do I mean? If we look here, we can see that the market has been breaking higher highs. We are still on the behavior of the market. The market broke a high, broke structure. And when it broke structure, it pushed up. We see a push phase. And then we broke structure again right here. We see another push phase. But I want you to look at this. When we created this high, okay, so these are swing points. These are higher highs, higher lows. So let me just use a color like maybe orange or something. So this is a high point. This is another higher higher low, high point, and then we have a higher low. Now, if we were trading this market, we would have anticipated that the market is most likely going to create a new higher high to push price to the upside, to continue with the momentum. But I want you to see this. The market pushed up, tried 1, 2, 3, 4 candles, right? This is me interpreting the market. The market pushed 1, 2, 3 candles. And then what did it do? It broke this structure, right? It broke structure to the downside, right? It failed structure. And we can also see that it also broke, or it took out this structural point again, which is the previous higher low. Okay. Now, looking at the top section here, if we are to interpret this as traders, okay, we'll say that the market has been pushing price up. Obviously, it lost its momentum and steam, and the market sellers try to sell, buyers try to push from this point, but sellers took over. They failed to even take out this side. That is another side. Now, if I pull out this line and I pick, you see this dip that has happened in the market. If the market was creating a higher high or was pushing to the upside, like we saw in the previous pushes, we would have seen that we would have created this high point and high point, right? We would have created this high point and then this high high. But in this case, we are failing to create the high point. We failed to create the high high, but instead what we did was we just had a high. We just had a high point, and then another high, but it failed to create a high. I like to call this a failed high, okay? I like to call this a failed high. Why? Because it failed to create a new high and then we broke structure. That is a sign that we want to look at the market. Another way of looking at the market changing the direction is when you're using trend lines, okay? That's when you use trend lines, right? Excuse me, let me just remove this quickly, okay? All right, quickly. Okay, so when you're using trend lines, you will see that the market has been carrying, or the market has been following a set of trend lines. Okay, so we had a touch here, we had a touch right here, we had the second touch here, and then we were expecting maybe a third touch, but what the market did was it broke out of the trend line. Okay, so this is a strategy that many traders use, but they actually fail to practically use it. So a trend line does not tell you exactly the deeper things of the market, like who's involved, are the banks involved, are the institutions involved, whatever. They are not going to tell you those things. It's not going to tell you those things, but instead it's going to tell you, give you clues like, okay, we have seen number one, the momentum was pushing of the candles was pushing up. We saw the momentum, the candles losing momentum. We saw also that we had a trend line that the market has been respecting. However, it violated. That's another sign. So for you to then now trade, it's another strategy. It's another concept. So remember this: momentum and momentum candles, the corrective nature of the market, the behavior, price nature, and price breaking structure. So guys, if you really loved this video, please leave a comment below. Make sure you like, share, and subscribe. And also, if you really want to learn more about our strategy at BGFX, we have a full mentorship strategy where we teach people how to trade, understand the market, interpret the market, grow as professional traders, and eventually get funded and create wealth for yourself. Make sure you click the links in the description, and you can also follow me on my Instagram page where I do have daily posts. Okay. All right. So ladies and gentlemen, this is BGFX Legend. A peace.